We're back. It is Friday. It is Friday. Had a nice one and done. You guys already know what it is. I like to kick off with a disclaimer. So please note that the following is not legal or financial advice and is provided for informational and educational purposes only. Investing in securities carries a high degree of risk and can result in the loss of your entire investment. You should consult with a qualified financial advisor or legal professional before making any investment decisions. The information contained in this presentation does not constitute an offer or solicitation to buy or sell any securities or other financial instruments. Any opinions expressed in this presentation are subject to change without notice and should not be relied upon as a recommendation to buy or sell any securities. Please do your own due diligence and research before making any investment decisions. All right, we got Julio 530. We got people coming through. So we just read the disclaimer. Now let's go take a look at, of course, we'll look at the Discord first. I always like to give the screenshots and the proof. So this morning, I said, was this today? All right, so today, market first opens up. Let the squad know that I was taking puts. I was scalping puts on SPY. And that was at 6:37. So if you're new to my live, if you're new to my TikTok, my name is Curtis G, and I focus on options trading for beginners. And I have a Discord where I put all my screenshots, all my plays and things like that, rationale, charting, and things of that nature. Now, if you're not familiar with my live, I do trade on West Coast time or California time. So for me out here, the market opens up at 6:30 a.m. So within the first 10 minutes, 7 minutes of the market being open right up here, I sent a screenshot letting the Discord know that I was getting into SPY puts. All right. And then the trade took about 5-6 minutes and I took profits on those puts, about 4 contracts. So right now where I'm at in my trading journey, I'm typically trading with about 1,000 per trade. And then I'm aiming for 5% profit. So very conservative, nothing too crazy, just kind of get in and out, get in my base hits and things of that nature. So we'll get into the trade recap, but I just want to take a moment to give a big shout out to JJ Warcuts 10, Yo Cheddar, Tyler Reed, EAK, Dream Reverend, Omar Aziz, Yes Sir, CJ, Big Time, Cantrells, and Omar Velasquez. Thank y'all for rocking with me. But like I said, we were just doing a quick little recap on the one and done for today. If you are new to my live, my name is Curtis G, and I focus on options trading for beginners, new options traders. So here's the Discord. I dropped the shots in there, show where I took profit. Like I said, I usually aim for 5% each day. I don't need to be greedy. I'm not looking for grand slams or home runs. If I can get a nice 5% each day on my trades, or at least overall, that'd be good. But let's go over what I saw and how I was marking it out. So nothing fancy, right? Nothing fancy at all. I do a simple, I feel like with this angle, my hands are like way crazy and way crazy on the screen right now. But what I do is a very simple opening range breakout strategy. Very, very simple opening range breakout strategy. Now, I want to just break it down for y'all. So let's go back to the beginning. I start off on the 30-minute time frame. So what we're looking at right here is the 30-minute time frame for SPY. If you are new to options trading, what that means is each one of these bars, each one of these candlesticks represents 30 minutes of time, 30 minutes of time. So we start off there. And then what we want to do is using the pre-market activity. So everything that we see shaded in this kind of orange area is the pre-market activity. So using the pre-market activity on the 30-minute time frame, I chart out the pre-market low, and then I chart out the pre-market high, and then I mark right when the market opens with the blue line, I mark out where the market opened at. So those are the 3 levels that I mark out. Now, if you are a beginner trader, options trader, what you want to do is wait for the 30-minute candle to close before you get into your trade. I think most of us know that, right? We know that typically the first 30 minutes of the market being open is very, very volatile and it moves a lot. But if you have a little bit of experience, if you're somewhat intermediate in your trading, what you can do and what I do is I will drop down to the 7-minute time frame. So down here we have a 7-minute chart. Each one of these candles represents 7 minutes of time. And what I looked for, let's go here. What I looked for was after the market opened, where did the 7-minute candle close? And so this 7-minute candle, which is technically during market open, even though it appears in the pre-market activity, is because on the 7-minute time frame, this candle here, this very last one that's in the orange shaded area, it starts at 6:29. West Coast time. But because it's 7 minutes, it ends after the market opens. So this first candle showed me that the price closed below the blue line. That's when the market opened. And I went in and I got in for puts. Now, what we saw on the 7-minute time frame, right, is a lot of expansion, a lot of volatility. But the puts played out because I didn't hit my stop loss. So it got very, very close and we came back down. It got close and then we came back down. And once we hit this long wick on the bottom, I was able to take profits and get out. But going back to what I just said, right? Going back to the beginner traders out there, trading within the first 30 minutes is very, very volatile. So if you're using this strategy, it's a lot safer and it gives you a lot stronger indication if you just use and wait for the 30 minutes. If you just use and wait for the 30-minute time frame, look at this very first candle in the 30-minute. It ended above where price opened at. You normally would want to target the pre-market high as your PT. But if you stayed in, you were able to catch this strong shoot up, that strong shoot up. And that's the long and short of the strategy. Now, the cool thing about this trading strategy is you can add any other indicators that you want for confluence, right? So even if you wanted to move up to a higher time frame, like the 45-minute or the 1 hour, just to give yourself more confidence, or if you wanted to use VWAP or EMAs, you can add all that in there just using this simple ORB strategy. So that's really all I've been trading lately. And that's what I've been going over each day. Just keeping it very simple, nothing over the top, no crazy indicators where this depends on this and this bounces off of this. And when this drops below, just keeping the trading very simple. And I've noticed that the more simple I keep my trading, the more consistent and easy it is for me to just get profits every day. I want to go through. Thank y'all for the likes. We got a few people rocking with us. Let me make sure I didn't miss any comments. Empowering and Building Wealth Digital. Thanks for coming through. Soulless TCG, Kyle Reading, Donald Samuels. Appreciate you. Nick, what's going on? What's up? What's up? What's up? Okay. I thought I saw a comment and I just want to make sure I didn't miss that person's comment in here, but it looks like we just got a lot of people that are coming and going. All right, Scooter says today is not a good example because it's Jackson Hole, more volatility than normal. Very, very good point. Yeah, J Powell did talk. We had Jackson Hole pretty much right after the market opened or after the first hour of the market or something like that. But with the strategy, I was able to get in and out before Powell talked. But he's exactly right, and I completely agree with Scooter that there was a little bit more volatility than usual, as we can see here, right, on this 30-minute chart. We kind of popped up, popped down, popping up, popping down, popping up. So not as linear as we would like it to be. I'm sorry, y'all. Just was getting a phone call coming in. But let's see who's all rocking with us. Let me tap in. Getting close to 1,000 likes. Who's running up the likes like that? Thank y'all for the likes. I appreciate y'all. 1,000 likes. Yo, so we got Wisdom 8. What's up? Jonathan Ree. I can't pronounce the name. I think it's Xerier. Xerier. What's up, y'all? Thank y'all for rocking with me. Thank you for rocking with me. Now, so that's the strategy. If you just now joined the live and you want me to recap the strategy, drop a 1 in the chat. I really don't mind. I just want to give as much value as I can to the trading community, especially the beginner options traders out there. So if you just joined my chat and you want me to recap how the trade went, please let me know. Please let me know. Because I definitely don't mind recapping it. Vision Princess, what's going on? Yo, my guy Reed, thank you for the likes. I appreciate that. I appreciate y'all. So until I see a little bit of feedback in the chat, if I start seeing ones, I'll do a recap. But I also want to show y'all, if you weren't a part of my live yesterday, I want to show y'all another strategy that I use. All right here. Here's a perfect example. So another strategy. Yo, Jasmine, what's going on? Gwen, HBL. Doja, we're just doing some strategies. I'm just sharing a couple of my strategies when it comes to options trading. My name's Curtis G, and my TikToks are dedicated to beginner options traders. So another strategy that I like to trade or set up, and this is something that I'm very, very proud of. I'm not going to say that I invented it because I know that I didn't, but it was something that nobody told me. It was something that my eyes had stumbled upon and that I recognized just from doing a lot of back testing and charting, is this bullish engulfing right here. Now, let me break it down to you guys to what I look for. So the first thing is my definition of a bullish engulfing is not the same as the formal definition, right? The formal definition of a bullish engulfing is when this candle right here, the opening price is below where this one closed. And of course, the closing price is above where this one opened at, right? Because literally the candle is engulfing this one. That's the formal definition. And I want to bring in specific context to this idea right here, because we can clearly see that where this candle opened was not below where this one opened, right? But my definition, Curtis G's definition of an engulfing, and this is just for me, how I did my back testing. My definition of an engulfing is, did this bullish candle body, did the price body go farther? Was the range wider than the body of this bearish candle? That's the first step. The first step is, was the range on this bullish candle wider than the range on this bearish candle? And we're only talking about the bodies. And we can clearly see that the body on this bullish one was wider than the body on this bearish one. That's step one. Step two is, did this bullish engulfing candle happen only after one red candle? As we can see, clearly it did. That's step two. So we got the bullish engulfing. There was only one red candle in between. We only see one. And then the last step, the last third step is, did this occur above the previous day high? So here we're currently looking at Monday, August 19th. We got the first two steps are in there. And then the next thing we want to check, the last step is, did this happen? Did this engulfing happen above the previous day high? So if we go back in time, let me squeeze down our chart. If we go back to Friday, we can clearly see Friday's high was way down here and our engulfing happened way up here. When we see that, when I see that, there is a strong possibility that the very next candle, the one that we would enter in on, is going to be bullish, and we're going to continue to get some bullish activity. Now, let me prove it to y'all, right? Let me show y'all. Let me prove it. I've back tested this scenario roughly 200 times. Let me show y'all. So if you're on my live yesterday, you saw this. Here's my manual back testing log. I literally went in manually. All the way back to 2023. As we can see here, I went to, if you guys look at my Excel sheet on the left-hand side down here, I went to almost 200 instances, almost 200 times where I saw this on my manual backtest log. I set up a formula. Where if it worked out, it got a 100. If it didn't work, it got a 0. That way it would tell me a percentage. And when I filtered it down, what we see is that there is an 80% chance, over an 80% chance, that when this setup presents itself, that the next candle will be bullish and we'll be able to take calls. So that's one of my favorites. And that's mainly because I discovered it on my own. I'm not saying I created it, not by a long shot, but I saw the pattern on my own. Nobody taught it to me. Nobody showed it to me. And so that's one that I really, really am proud of. And so I want to share it with y'all just because I understand what it means to be a struggling trader. I understand how hard it is to find just something simple and easy that works. And so that one I wanted to share with y'all. So we got a question from Jalen. Jalen says, what time frame? And I'm glad you asked that because I've only tested this, Jalen, on the 30-minute time frame for SPY and other ticker symbols. I've seen this consistently on the 30-minute time frame. So if you're trading on the 30-minute, that's where it works the best, and there's an 80% success rate. Now, there is one additional thing that you might want to consider. You don't necessarily have to, but one thing I also took note of in my back testing, which we all know, is that 99 or at least 95% of all candles have some type of pullback, right? There's some type of bottom wick and top wick on the candle. What I did with all the instances that were successful, I put in how much did the candle pull back so that I can get an average amount. And what I saw on the successful ones, that there was an average pullback of about 21 cents, 20 cents. So what you could do, if you wanted to give yourself a little bit of breathing room, right? If you wanted to give yourself some breathing room, instead of just entering, because this would be our signal candle, and then this would be the candle that we entered in on right here. Instead of jumping in right away, you could just wait for that candle to pull back. Let me see if I could bring it over for us. Well, the setup is a little weird, but basically we could wait for this candle to pull back at least 10, 15 cents, 20 cents to give ourselves a little bit of breathing room in terms of our risk management and our stop loss. And then we can catch this ride all the way up. All right. Okay, so Jalen asked what time frame. That was the 30-minute. He says, where do you take your entry? You can do one of two things with this particular strategy. You can get in right when the candle opens, or like I showed you guys on my backtesting log, you can wait for that candle to have a little bit of pullback. And on average, what I saw is that the candle has at least or around a 20-cent pullback. This might be a little more. They see it opened up at 557 and 53 cents, and it came all the way down to, look at that, 557 and 36 cents. So you could wait at least 10 to 15 cents for it to come down, get in the entry for your calls and ride that up. All right. TTV No More Time says, how are you trading? What method? So I went over two methods, and I don't mind going over both of them. This particular one right here is my own version of the bullish engulfing on the 30-minute time frame. And then the other one is an opening range breakout strategy. Those are the only two strategies that I've been trading for the last month and a half, maybe 2 months. And it's just been consistent success. Now, like I said, if you're just joining my live, I just want to give you guys a few heads up about a couple things so you have more context. I'm in California, and so the market opens up for me at 6:30. So if you see some of my timestamps, just keep that in mind. I'm 3 hours behind the regular market time. Number two, the other thing to keep in mind is I have my own set of definitions for these certain things. So if you want me to go over them, I'm definitely down. Let's see. Appreciate the follow, TTV. Appreciate that. Knox 2023 says, amazing. I appreciate the love. Thank you, my guy. Angel says lower shadows and upper shadows. That's exactly right. Yep. A Knight 6LE $. This is TradingView. Yes, this platform right here is TradingView. So if you're just coming through the live right now and you want me to go over the two strategies that I just talked about, please drop a 1 in the chat, because I want to make sure that everybody has an opportunity to understand the two things that I just went over so that we're all on the same page. And this is just my way of giving back to the community. All right, we got ones coming through. Ones are coming through. All right, so I'm going to start over from the beginning for the people that just joined. There are two main strategies that I've been using just to trade. They're very, very simple. That's all I use. And from what I've tested, they work the best on like SPY and QQQ, but you can use them on Amazon, Google, Apple, the other tickers. I like to use SPY and QQQ because they're the most liquid. You can get the cheapest contracts. They got low spreads, things like that. And the funny thing is, I never imagined myself being the type of trader that only traded one or two ticker symbols. But now here I am after all this time. Okay, so reset. We're going to start over from the beginning. We're starting over from the beginning with the first strategy. And the first strategy that I trade is basically an opening range breakout strategy. And it's not one that I came up with. It's one that was taught to me. So this was something that was taught to me. And this is strategy number one that I've been trading pretty much every single day. So the first thing that we want to do is we are currently looking at the 30-minute time frame for SPY. And first, what you want to do is mark the pre-market low, which is what we got right there. We want to mark the pre-market high, which is what we got right there. And then when the market finally opens up, you want to mark where did price open. I use white lines for the pre-market highs and the pre-market lows. And then I use a blue line for where market opened. But of course, you can use whatever colors work best for you. Now, if you are a beginning trader, what you want to do is you want to wait for this first 30-minute candle to close to give you an indication if you should take calls or puts. What do we see on this first 30-minute candle is that it closed above the open. And because it closed above the open, we would take as an indication calls to the upside, and you were able to catch this. Now, please note today was a unique day because we had Jerome Powell talking, so there was more volatility than usual. Big shout out to Scooter for reminding us of that. But still, the principles are the same and you apply them each day. And then what you want to use for your price targets, and I know this is kind of a bad example, but what you kind of want to use for your price targets based off of the opening is the pre-market high and the pre-market low. Now, first 30-minute candle closed, it closed above the open. You would be indicated to take calls, and then you would take that ride up. If it closed below the open, we would be indicated to take puts and then catch the ride all the way down to the downside. And we can kind of see that here. When the market finally came back down and closed below the open, what happened? We came and shot down to the pre-market low as a price target. Boom. So now that's for the beginners to at least wait the 30 minutes. But if you have a little bit of experience trading, right? If you're disciplined, you know to stick with your stops, you know to get in and out, you don't hesitate, you don't let your emotions control you. What I do is I will drop down to the 7-minute chart, right? So here we go. We have a 7-minute chart. Each one of these candles represents 7 minutes. Now this very first candle here Even though it appears to be in the pre-market zone, that's because this candle starts at 629 and then it closes after the market opens. Now, this was a very sharp in and out that I did. So because this first 7-minute candle closed below the open, I went ahead and took puts. Now, this one was very close, right? Because it got very close to my stop, but eventually these downside shadows or wicks bailed me out and I was able to get profits on those puts right there. But if you want to wait for a longer time frame, which is really what we should do to give you more of an indication, we can see that that was the better route to go. But that's the crazy thing about trading, right? You can make money both ways, both sides. So that's the first strategy. The first strategy is the opening range breakout based off of the pre-market highs and the pre-market lows. And then you can set the pre-market high and the pre-market low as your PTs or as your price targets, right? That's the first one. That's the first one. But like I said, don't use the 7-minute unless you're an experienced trader. You know you don't hesitate. You know you get in and out. You know you stick to your rules. If you're not experienced, which that's what my lives are for, it's for the beginner traders out there. If you're not experienced, just use the 30-minute. And look, the 30-minute will talk to you. 30-minute chart right here. Our first 30-minute candle closed. We get in calls on this one. We ride it up and get out. And so one thing to keep in mind is I am more of a scalper. I am not a day trader. Now, my definition of scalping are trades that are 60 minutes and less. So if you get in a trade and you get out of it in less than 60 minutes, that's scalping. If it's more than 60 minutes, my definition says that that's day trading. I'm more of a scalper. So just keep that in mind. I'm more of a scalper. And looking at my historics, my data, my history, most of my successful trades are less than 10 minutes. And I'll give you guys an example. Right, here's the screenshot from today showing the community that I got in up here at 6:37. And then where did I get out? 6:43. So it was a 6-minute trade. All right, so that's the first strategy. That's the opening range strategy right there. Yo, Alex, thanks for the follow. You guys give me a moment. I'm going to go back through the comments to look for questions. As a matter of fact, let me do that now just in case anybody had questions on this particular strategy. Thank y'all for the follow. Thank you. Thank you guys for the likes. Thanks for showing love. Okay, so we're going to go to strategy number 2. This one is one of my personal favorites. And even though it doesn't happen every single day, it's one of my favorites because it was something that I discovered on my own. I'm not saying I created it. Please don't get me wrong. I'm not saying I created it at all. All I'm saying was nobody taught me this strategy. No one taught it to me. It was something that I recognized just from when I was going back doing back testing. And so the strategy basically is, I'm going to say it and then I'll go over it. The strategy basically is we're going to look for a bullish engulfing that happens above the previous day high and there's only one bearish candle. So this is the perfect example right here. We've got a bullish engulfing, and just a reminder, my definition, and this is very, very key, especially if you're going to go back and back test this, Curtis G's definition, my definition of a bullish engulfing is slightly different than the formal definition. My definition of a bullish engulfing or an engulfing in general is, did the body on this candle, right, was the range of the body on this candle wider than the range of the body of the previous one, the opposite candle, this bearish one? So we're looking for a bullish engulfing, and we can clearly see that the range of this body was wider than the range of this body. That's my definition of an engulfing. The formal definition is slightly different. So that's step 1. Did this body go wider or farther than this body? Step 2 is we want to look for, did it occur above the previous day high? So we're looking at Monday, August 19th. And so the previous trading day was a Friday. And if we go back to Friday, we just kind of scroll over here, we see that Friday's high was way down here. That's step 2. So we've got our bullish engulfing. It happened above the previous day high. And then the last one is, and I already kind of said it, there's only one bearish candle right here. When you see that setup, there is a strong indication that we're going to have continuous bullish momentum. Now I want to give you guys some receipts. I want to show you that I've really done this. So here's my back testing log where I went in manually almost 200 times. If you look over here, look at the rows on my Excel sheet. I went almost 200 times going back to 2023 where I back tested this. And when you see a bullish engulfing that happens above the previous day high on the 30-minute chart, there is an 80% chance that they're going to have bullish continuation. We're still going to have some bullish energy. All right, so let me check the chat, see if we had any comments, any questions. Just want to rock with y'all. Let's see how we got. All right, no comments, no questions. I don't see anything. Yes. All right, for sure. So yeah, that's the long and short of it right there. That is the long and short of the strategies. Now, if you know me, if you've ever been on my live, I always have to show love and be honest about, where I get my information from. Like I said, this strategy right here, the bullish engulfing, this is one that I discovered on my own. Nobody taught it to me. But the opening range breakout strategy, that one, let me go back over here. The opening range breakout strategy, here we go. The one that's based off of the pre-market highs and the pre-market lows. Let's see. 30-minute. Boom. Why is this off? I must have moved this. But basically, my bad, y'all. The person who taught me the opening range strategy that's based off of the pre-market highs and the pre-market lows, that person, I'm going to go to their Twitter, just in case you want to get it directly from him, because I'm not a gatekeeper. I'm all about giving value. I know how hard it is as a beginning trader to get information. And so the person who taught me this, and no, I'm not getting any kickbacks, no money, nothing like that. This is the kind of like my mentor. He's the one that taught me that opening range breakout strategy. Really dope dude. He's actually hosting a presentation tomorrow, this Saturday. So if you want to get the exact step-by-steps, all the technicals, all the rationale, if you want to ask questions, he's going to be hosting a presentation this tomorrow, Saturday. So go to Twitter or go to X, look for @FloydWilliams46. This is the guy who taught me the opening range breakout strategy. So please go check him out. Hit him up. Like I said, I'm not getting any kickbacks. I don't get any money. I don't get anything. But, just go hit him up. There you go. So with that being said, do we got any questions on either one of those? All right, Tiny Rhino says most breakouts fail. So Tiny Rhino says, are you profitable? Yes, I am profitable. Study charts. No one person has the answer to the markets. It's all a scam. How long you been trading? So to Tiny Markets, I am reaching the second year of my trading journey. Now, to be completely transparent with everybody. So essentially what happened with me was I did my very, very first options trade in June of 2020. And so in June of 2020, like a lot of us, right after the pandemic, we got exposed to trading. People were trying to figure out how to make money. So I got exposed to options trading in June of 2020. And then all of the rest of 2020, all of 2021 and 2022, I just BS'd. I didn't take it seriously. I half ASS'd it. I didn't really put my full intention to it, and I lost thousands of dollars, tens of thousands of dollars, basically just gambling, just betting. And then it wasn't until January of 2023 where I said, I want to be committed to this. I really want to learn this. And so there are a few things that I did that really changed my trajectory. It wasn't until January of 2023, and this is for all the beginner folks out there, that I got a trading journal. I created a trading journal. So that's the first thing. So if you are a new trader or a trader who's struggling, the very first thing that I would ask you is, do you have a trading journal? And if you don't, then you definitely need one. And if you do have a trading journal, are you logging in your journal consistently every time you trade? That was the very first thing that immediately improved my trading. The second thing is, and I really didn't quite believe this when I got into trading, but I heard, people that I perceive to be seasoned traders say this. You have to find one person, one mentor that you really believe in, and just stick with them. Stick with their strategy, stick with the way that they trade, learn it, and then, obviously develop it into your own and go on about your business. When we are out here and we're following all these different influencers and we're following all these different people that have these different strategies, in our subconscious and in our trading mind, it does pose a conflict. So it's hard to really just get something that sticks and works. So those would be the two main things that I would go back and do differently when I was first coming out trading, especially those first few years where I just effed off, gambled, and I lost so much money. But like I said, if you want to get it directly from the person that taught me, this is the person that taught me the opening range breakout strategy. He's hosting a presentation tomorrow. And then I went over my bullish engulfing strategy with you all. If you're just new to the live and you want me to go over it again, of course, I'll do that for y'all. Or we could look at how I would trade some other ticker symbols. And it's important to note, right? There is no strategy that works 100% of the time. Every strategy, every setup, every quote unquote edge has some type of vulnerability where the setup won't work. right? So please keep that in mind. I know it's a hard concept. I know none of us like the idea of losing money. It's a painful thing, but that's also another thing that really helped me with my trading. Just understanding there will be a loss. You will get into a trade. You will do everything right. And for whatever reason, the trade will go against you. The most important thing is learning to cut your losses short quickly. Now, this was something that was still recently something I had a hard time wrapping my mind around. So the way that I was able to get over it, and I know some people will disagree, and I'm completely open to criticism, but for me, the way I was able to get over that was just to pick a dollar amount, and that's it. I don't care what it is. So my dollar amount is basically $100. If a trade gets to down $100, I'm out of it. I don't care what it is. I'm out. I know there's some people that say that's stupid. You got to consider market structure. You got to consider this or that. I'm not knocking them, but keep in mind, I'm more of a scalper. So the overall market structure doesn't come into account too much for me because I'm trading on the much lower time frames. For me, what has worked out a lot better, which is having a set dollar amount. I don't deviate, just stick to it. There's been times where I was hoping and hoping and hoping it would turn around. And then before I know it, the trade has gone way against me. I'm down 50%. I'm down 60%. And I'm just quite devastated. All right, let me check in with the chat. Let's see what's going on. Yurichichi, do you trade future contracts? I do not trade futures. Currently, right now, I'm only trading options. I've had a lot of friends telling me that I should get into futures or to Forex, but I want to master options trading. I want to get to the stage where I know confidently I can make $5,000 a week or $10,000 a week options trading with like no effort. Once I get to that stage, then I'll go to futures or something else. But like I said, I want to stick with one thing. I want to master it before I deviate to something else. All right, Gil says, can you teach me? For sure. Definitely. You can hit up my bio. You can check out my videos. And if you ever want any of my past recaps, right, let me show y'all. If you ever want any of my past recaps, or if you want longer format, you guys could just go to my YouTube channel, which is my exact same name, Curtis G24. And if you go to my YouTube, I have all of my videos uploaded where I do all my trading recaps. All of the videos, all of my trading recaps showing you everything that I traded, win, lose, or draw, whether I took a loss, profitable. I show everything, all of it, all of my long format videos are all uploaded to YouTube where I do trading recaps on everything that I did. You guys can see here, going back. Yep. So you got a couple of different options which works best for you. Of course, I got the Discord. I put screenshots of everything that I do. So if I take a loss, if it's profit, no matter what it is, I do the exact same thing every single day. And that's part of it. One thing I will say, and I know it sounds cheesy, but one thing I definitely will say that I've learned is good trading is boring. Good trading is literally just doing the exact same thing every single day. Every single day, the exact same thing. I don't care. Yep. And the reason why I say that is I just never really imagined how true that would be. I never imagined how true it would be when I see traders like ones that I believe are seasoned veterans, when they say good trading is boring, when they say doing the same thing every single day, when they say they don't care about the outcome of one single trade, because becoming a successful trader is not based off of one trade. It's not based off of 10 trades. It's not based off of 100 trades. Being a successful trader is based off of thousands of trades that you've done. How much time have you just been doing the exact same thing over and over? And that's why they say good trading is boring. All right. What's up? Thank y'all for the follows. Thank y'all for the likes. Ran up 2K on the likes. I appreciate that. I appreciate it. So yeah, Gil, just tap in with me. Yep, tap in. I appreciate y'all. But I just wanted to show you. I don't know why it looks like this is brought down, but we're going to bring this down to here. Cool. And this is Friday. There we go. A little bit of bouncy activity with the market. But look, it's crazy how that works out. And remember, right? So if you were looking for a downside play, once the market finally closed below the opening, which is this blue line right here, you could hop into puts. It would have been a little choppy, and then you just use the pre-market low as a price target. So this candle opens up, get into your puts, and then you could have rode that down and got out. Don't be greedy. It hit the PT. Don't be greedy. Get out. Execute. Get out. Don't overstay your welcome. And then we see that the market bounced back up to the upside. And then now this is a little hazy because really the strategy is based off of targeting the pre-market highs and the pre-market lows, right? But if you wanted to, even though this candle closed above the pre-market high, You could have scalped some quick calls. You could scalp some calls there. Knox 2020 says, do you also trade live and explain what, oh, live and explain why you're doing? I do every now and then. I got to get better at that, man. I know a lot of people are asking for that. And so I'm going to start doing it more and more. I'll keep it real with y'all. Like, where I'm at right now, I'm not a full-time trader. Like I have a real 9-to-5 gig. So I usually hop on live and I do my trading recaps in between meetings or things like that. So the goal is to become a full-time trader. But as y'all can see, I'll show y'all, like, I'm not trading large amounts of money, right? My average trade is about, 1,000, and I'm making anywhere from like $50 to $100 on each one, right? My average trade, I use about 1,000, make about 5%. So that's where I'm going. So I'm just building up. But I do, Knox, there have been a few people out there that have said, hey, we want you to go live, and I'm not opposed to it. So I just have to do better at planning my next days because I do have a gig. So if I know that, hey, I don't have any like morning meetings or things like that, then I'll hop on live and trade live. And so I'll make it a goal of mine to start doing that next week, the best that I can. Next week, if I could go live and live trade, I'll start doing that. All right, Keisha Renee, thank you for the follow. We got Jin Mai or Jin Mi. Hopefully I pronounced that right. Appreciate you. Thanks for coming through. Now, if you just joined, so I don't know how many people have, been in and been rocking for a while. We've got Carlos Reyna in here. We got Night 6 LES, DJ. We got the Phoenician. We got El Little Boss, Michael Steinger. Blessed Man Mark. So if you just did come through the live and you do want me to recap, I know there's some people that have been rocking with me the whole time I've been live or have been on here for a while. So you've already heard the recaps of the two strategies. But if you did just join and you do want me to do a recap, please let me know. They're very simple. They're very, very simple. And I know it sounds corny, you guys. I know it sounds cheesy because it's cheesy. It took a long time for me to believe it, but really it's the simplest like setups and strategies that work. I'm not knocking any other. So if you have a complex setup or a complex strategy, or your strategy, your edge has a lot of like different components to it, I'm not knocking that at all. All I'm saying is that for me, as somebody who struggled a long time as a beginner trader, I found that my trading performance is a lot better when the strategies are simple. So if you just want me to do the recap on the strategies, we got one yes there. We got more recaps. Okay, I love it. Let's do it one more time. So we're going to go, if you got your pen and paper, go ahead and get some notes. If you're going to use your iPad or your phone or whatever the case may be, go ahead and get notes so we can break this down. I'm going to start off with the first strategy, which is the one that I'm really, really proud of because it was one that I discovered on my own. It's not one that I created, please. I'm not trying to say that I created anything. I'm just saying I discovered it on my own. And I'm pretty sure people have already been doing this for, generations now. So here we are. We're looking at SPY on the 30-minute chart. The first thing I want you to make note of is this particular strategy that I'm about to go over. I've only tested it on the 30-minute time frame. This one, I only know about its success and how it works on the 30-minute time frame. So we're looking at SPY on the 30-minute chart, meaning each one of these candles represents 30 minutes of time. The first thing that we want to look for is a bullish engulfing. That's step one. We want to look for a bullish engulfing. But I want you to know something very, very important. My definition for the way that I've spotlighted this strategy, this setup, my definition of a bullish engulfing is slightly different than the formal definition of a bullish engulfing, right? The formal definition of an engulfing says, especially for a bullish engulfing, says that the price of this candle, this bullish one, is below the bearish one. And of course, it ends above it. That's not my definition. My definition is slightly different. What I look for in an engulfing is when the range of the body on the bullish candle is wider or farther, it expanded more than the range on the body of the bearish one. And we can clearly see that. We can even see that the price opened up above where this one closed, right? So my definition of an engulfing is that the range of the body on the bullish candle was simply wider than the range of the body of the bearish one. That's step one. Step two is we only want one bearish candle. That's it. We only want one bearish candle. That's the next step. Step three, the last step is, did this setup right here, did this occur above the previous day high? did it occur above the previous day high? And as we can see over here on the right where my hand is, my finger is, that's Monday, August 19th. And over here is Friday. Here's Friday's high way down here. Those three factors came into play. And what that tells us, or what I've seen from my back testing, is that we will continue to have more bullish momentum. Now, how do I know this? How did I stumble upon this? It's because I back tested it. Here's my Excel. I back tested it almost, let me move this over, almost 200 times. You can see all these rows that I back tested on Excel going all the way back to 2023, right? So I did the signal time. Basically, these are all SPY, so that's why I didn't put anything in the symbols. And then this is how I knew that it works for only one bearish candle, because I had a column in my backtesting log where it tells me were there multiple lead up candles or was there none. And then I look for, was it above or below the previous day high? Yes. Above or below the previous day 50%, above or below the previous day low. So it was above the high, which means that it was above everything else. After collecting all of that data, because these are filtered, after collecting all of that data, what I saw is there is an 80% chance that we're going to continue to have more bullish momentum or more bullish activity. And what do we see? We go back, August 19th, bullish engulfing that occurred above the previous day high. And what do we continue to do? Boom, 80% chance there. Like I said, we all know that not every strategy works 100% of the time. We know that. And this is the same thing with this strategy. There is a time where you might see a bullish engulfing above the previous day high and it might still come back down. But we have a high level of confidence that this has been back tested almost hundreds of times. Almost 200 times I've back tested this going back to 2023. All right. What time frame? 30 minutes. So this particular strategy, thank you, Robert, for the follow. This particular strategy, I've only back tested it and it only works. Well, I don't know if it only works, but I've only tested it on the 30 minute. Now, the second strategy, and this was the one that was taught to me, so I'll go over it. It's a opening range breakout strategy based off of the pre-market high and the pre-market low. So the first thing we want to do is on the 30-minute time frame. Now, the good thing about this is you can actually do this on different time frames, whatever works best for you. That's one of the things I really, really like about this strategy that was taught to me. So the first thing you want to do is mark out your pre-market low. You want to mark out the pre-market high. I do it with 2 white lines. And then when the market opens up, you want to mark where did the market open. And I do that with the blue line, but of course, y'all could do it with whatever colors you like. Now, the thing that we want to do, which is the most important, or they're all equally important in these steps, but for us new traders out there, especially for those of us that are a bit impatient, the most important part is you want to wait for this first 30-minute candle to close. If the first 30-minute candle closes above the open, there's an indication for you to take calls. If it closes below the open, there's an indication to take puts. So what do we see? This first 30-minute candle, it opened up, it closed above the open, it closed bullish. We would have gotten calls here. And look, just ride that up. But just remember, we don't want to be greedy. You do not want to be greedy. You want to get in and out. Don't overstay your welcome with the trade. Get your money and go. But the cool thing is, what do we see later on in the day, right? When the price finally closed below the open, you could use the pre-market low as a price target. So if you waited all day for this to happen and you got into puts, you would get in on this candle. And yeah, it did end bullish. This is why it's important that you don't overstay your welcome. You get in and you get out, take your money and go. You got in on your puts, caught that ride down to the pre-market low, exited and kept it going. And so that is the long and short of those strategies. Very simple, very easy, nothing complex, nothing over the top. But the dope thing about this opening range strategy is that you can include other indicators to give you more confidence and more confluence. If you want to go to a higher time frame, you can do that. If you want to use VWAP, you can do that. If you want to use EMAs, you can do that. You can add all those to give you more confidence about using this strategy. All right. Thank y'all for the compliments. Appreciate you, Robert. Aceres, thank you for the follow. Appreciate that. Thank y'all for the likes. Thank y'all. My bad. Just getting calls and things like that. Okay. So that's the long and short of it, y'all. Like I said, this particular one about the opening range, it was taught to me by someone that's somewhat of like a mentor. He's primarily on Twitter. This is his account at Floyd Williams 46. He goes by the name Charts. He's actually hosting like a presentation tomorrow. And like I said, I'm not getting any kickbacks from him. I'm not getting any money. I'm no sponsor, nothing like that. I'm just not a gatekeeper. I don't gatekeep information. I try to be as transparent as possible to tell y'all where I get the info from so that you can go to the source. And of course, you guys can hit me up on my videos, leave comments, or just reach out to me, send me a DM, whatever I can do to give you more value. And then just tap in with me. All right, y'all. Peace.